Friday, February 28th, 2020, MONERO 64, home of alternative economics and contrarian views. So it surely looks like the everything bubble has been burst, in my opinion. I've never seen the stock market drop this steeply for 4 straight days. And even reading about the stock market crash of 1929, there were days when the market rallied back then. There were days when the market rallied and finished halfway up from its lows. Yesterday, didn't follow the market that much. I was out playing golf, but I saw that it rallied almost back to positive and then turned around and went back down, finished down almost 1200. So it's definitely looking not good. Buy the dip is not working at the moment, and overnight we've continued to see a lot of losses. We have paired some of the losses. Right now, the Dow future, as I speak here at 7:36 a.m. London, Dow future is down 330. It's up about 300 from the lows. So we've been as far down as more than 600. What else? Some of you, of course, are probably asking yourselves, why aren't gold and silver doing better? Early in the week, when the sell-off started in the stock market, gold almost got up to 1700. And right now, as I speak here, we're down almost $20 at 1625. Yeah, it doesn't make sense, but a lot of things in the financial markets don't make sense. Why is that, in my opinion? Well, because the bankers are in charge of everything. And I think they know they need gold. And they're the ones who have been controlling the price of gold and silver for years. They always have big paper short positions. And I think that's what they're doing. They're just trying to retreat. And it's an easy market to control, the gold paper market. The futures, they're the biggest players. And I think that's what they're doing. And don't forget, we started the year at 1,515, or that's where it closed, 2019 gold. Now we're at 1625, so we're still up 7% on the year. You need to look at the bigger picture. The consequence of the crisis that we're having right now, and who knows how serious it's going to be health-wise and for the world population and for people in general. But we can safely say that the markets are saying that for the economies around the world, it will be trouble. And it will be trouble for this credit bubble that we've had since '08. The credit bubble was only created to keep the system going. Nothing was fixed after the '08 crisis. Nothing. They've solved the crisis with even more debt. Central banks created trillions and trillions of dollars of funny money. We've seen that lately as well. Household debt in the U.S. has reached a record, about 14.5 trillion, which is above the record it had just before the '08 crisis. So nothing was fixed. They just injected the patient with even more heroin or cocaine, the drug addict, the credit machine. And unfortunately, we are all part of this, unless, of course, like me, you have almost no debt. Well, I don't have any debt if you stay out of the system. But there's a lot of people out there who do. And they're not only individuals, but corporations. Can you imagine what's going to happen to the all the buybacks, all the money they borrowed through the bond market to buy their stock? And now their stock is like plummeting. It's going to have huge consequences. So I wouldn't worry about precious metals. They will protect you come what may. They have protected people's purchasing power for over 3,000 years. And this is the biggest bubble we've seen ever in recorded history, in my opinion. And it will be the biggest correction. Is it time to buy the dip for a quick move higher? I don't know. I want to show you a chart though, a long-term chart of the Dow. I've shown this chart before. It's going back to 1920. It's a logarithmic chart, so it's not a geometric chart, which would look ridiculous really at the levels we are. And a few years ago, the trend line on top here was around 28,500 in the Dow. We've managed to keep going up. Right now, that trend line is around 31,000. The recent high was, I think, about 29,700. So we didn't quite reach that trend line. Yes, even I thought that the Fed could keep asset prices inflated, that we could even rally up to 40 or 50,000 in the Dow. And that gold would follow that as well. But it looks like the crisis emanating from China is the proverbial snowflake that triggers the credit collapse, the collapse of the everything bubble. Yeah, everything is run on credit in our modern day economy. Well, the US economy is 2/3 consumer credit. I would say the UK is very similar. Chinese is not as much. So, yeah, you look at this chart, the correction we're having right now looks like a little blip. So I would say there's a lot of room on the downside for the markets. Is it going to happen in the next week, next month? Probably not, but you never know the way things are going. And what kind of target should we look for on the downside? Well, I've heard many people with different targets. Some people say we could go to around 6,000, which is pretty much the support there, the lower trend line. I've heard someone say 4,000. One of my friends in the city said that the people he follows are looking for a Dow 4,000. You might think that's ridiculous, but if you look at 1929, the top in the Dow was around 386, and the bottom was in the third quarter of 1932. 3 years later, it bottomed at 40. So it was almost a 90% drop. Where would 90% be from the top at almost 30,000? Well, it would be 3,000 Dow. What would the world look like? I don't know. Very different, of course. Physically, of course, the world wouldn't change. Nothing would change physically in the economy. It's more the credit and the monetary system. It probably would mean, of course, definitely mean that people would be living more within their means. They wouldn't be spending so much money that they don't have or credit. I think the last 30 years especially, we've seen people spend the future, because that's what borrowing is. It's spending the future. So interesting times, I would say. Just a few things to look at right now. Year on year, we were talking about how gold is up about 7% since the end of 2019. The Dow, for example, as of yesterday's close, is down 9.7% on the year. That's versus the Federal Reserve note. So versus gold, the Dow is down almost 17%. So that's what you need to keep your eye on, and keep a look at the bigger picture. All the noise that we're seeing now in gold and silver, that's just noise. S&P is down 7.8 year on year, and the NASDAQ is down 4.5. So actually, yeah, if you've been holding gold for the long term, you're actually doing well. Yes, this week is frustrating. If anything, it gives us the opportunity, like the bankers are having right now, to cover their positions. I know you probably don't short gold, but you have an opportunity to still accumulate physical gold instead of 1750, where it probably should be. You're accumulating at 1630 or 1625, and here in the UK, I've heard the premiums are very high, maybe 3-5%. So there you go. Bond market. I mean, one would think if the everything bubble will implode, that bonds will be next, and I think they will. Is it going to be right away? Probably not, because if you look at John Exter's inverted pyramid, long-term bonds, short-term treasury bills are near the bottom of the pyramid. Of course, gold and silver are at the bottom. So I still expect to see a rush towards treasuries. People still consider them safe haven. They don't know any better. But eventually, I don't know when, that's going to go as well. It might not go in terms of Federal Reserve notes, but in terms of real money, gold, silver, that's going to implode. That's going to lose value as well. But be as it may, right now, the 10-year yield is at 120, right on the lows. We broke 132 this week, and it's called convexity. That means that the longer term the bond is and the higher the price goes, the quicker it moves up. It's it's like a rocket. It goes. That's convexity. The curve. It's like a curved line. It's not a straight line. So the lower the yield goes in the 10-year and the 30-year, the quicker the price will go up. So that's still part of the everything bubble. I think that will eventually collapse as well, that bubble. Don't know when. 30-year 170. Yeah, there must be a lot of question out there, probably in the mainstream media, and probably you asking yourself, will the Fed intervene? This is getting, really bad here. I think we've dropped 4,000 points in the Dow the whole of this week. Are they going to cut rates? Well, they know that the problem we have right now is a lot of it a supply problem, global supply chain, but it's also a demand problem. People are not traveling as much, or not traveling as much, or doing as much tourism, or getting out of the house. They're concerned. So you could say, well, if they cut rates, it could help, but I don't think it could. If people, just because money, the cost of credit is going to be a little lower, would you risk things? Probably not. But we know that the only thing central bankers know how to do is to cut rates, to provide liquidity. So I'm not sure. I have a feeling, though, that they could come out and try to announce something before the end of the week, today, on Friday. So who knows? They could announce more QE instead of cutting rates. QE would probably be a good thing. It would keep their balance sheet moving back up, because it's kind of stabilized lately. The repo market's still a problem, of course. So, definitely looks really bad. I think the everything bubble is starting to burst. And why do I say starting? Well, because I would expect bonds also to burst. To finish off, just want to show you this picture. And it proves to you how the bankers are in charge. This is John D. Rockefeller Jr. He donated $8.5 million to the United Nations when it was founded back in the 40s after World War II. So for those of you who trust the WHO or any other UN institution, don't forget, they're owned by the bankers. $8.5 million. Back then, I did some calculations in terms of gold. At $35 an ounce back then, At today's price, it would be the equivalent of $400 million donation to the UN. Interesting times, of course. Let's see what happens today. Will the markets finally rebound after 4 days of big drops? I wouldn't bet my house on it. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.